Hi, I'm Mike Patel with First Team Real Estate. And today I wanted to talk about some tips on being cautious about getting a forbearance on your mortgage payments. Before I get started, I wanted to let you know that if you're considering doing a forbearance, please seek legal advice, call your attorney or your financial planner or your mortgage service bank, because I'm not a lender, I'm not licensed, so I cannot give you legal advice. And also let me tell you why I'm sharing these tips. I got a couple of calls from my past clients, and one of them actually lost his job, and the other client has a business that's not doing well at all in this coronavirus situation. So he's scared that he may not be able to make the payments third or fourth month down the road. So what are their options? So again, the first thing I told them is call their mortgage service providers and negotiate to see if they can do a forbearance. So what is a forbearance? Basically, a forbearance on a mortgage is a temporary hold on your payment. Usually the lenders will allow a forbearance because you have a really hardship where you cannot make your payments, or possibly a death in the family where the income has been lost. So let me share you the cautions on doing a forbearance, or 3 tips on why you may not want to do a forbearance. Of course, if you have to do one, you may proceed with it. So caution number one has to realize that a forbearance is just a temporary hold on your payment, but it's not a forgiveness. So even though you don't make those 3 payments right now, they're still due. Caution number 2, or tip number 2, is when the forbearance period is over, the amount that was past due or on hold is due the following month. Let me give an example. Let's say your payment is $2,000 a month, and you had a 3 months forbearance from your mortgage provider. So on the 4th month, your whole amount is due. So the 3 months of forbearance are $2,000 a month, which is $6,000, plus the current month, the 4th month, which is $2,000. So now on the 4th month, $8,000 is due. So you may be able to make that payment if you can find temporary money from somewhere, or if you were able to borrow it or get it from somebody, then it's resolvable. If not, then it's a situation again where you have to renegotiate with the bank or your mortgage provider. They can give you some more time to pay off, or what you may be able to do, depending on your mortgage service provider, is put that forgiveness amount for the 3 months in the example I gave you towards the end of the payment of your maturity. That may be a good solution, but that depends what you end up negotiating. And the third caution that you may want to consider by doing a forbearance is that, let's say you did a forbearance for 2 to 4 months and everything was fine, you got your job back and you paid and everything, and in the future, should you decide to do a refinance, the forbearance situation may significantly impact whether you can do the refinance or not, or what your rates are. So those are the things you may want to consider. So hope you're not in a situation where you have to do a forbearance, but if you do have to do a forbearance, please seek legal advice. And I appreciate you looking at this video or watching this video. If you have any comments or questions, please comment below. And if you can like and subscribe, it's always appreciated. Thanks again.